Okay, what we're going to be looking at here is just intangible assets, and we're going to be looking at other types for startup here of operations or new businesses that are being started up, and we're only going to go through some definitions here and how we'd be handling these. And what we'll be looking at here is startup costs for new operations here, initial operating losses for startup of operations, advertising costs for new products here, and computer software costs for selling and administrative any new computer software that's being developed here. And for the most part, these costs are expensed as incurred here. And just to make it clear here, these are separate here from these other types of intangible assets, which are addressed separately here: market-related ones, customer-related, artistic-related, contract, technology, research and development, goodwill. These are all separate topics here. All we'll just go through here is just a definition here for these other ones here. So looking at startup costs here, we'd expense of them as incurred here, and these are one-time activities to start up a new operation here. So we'd be just looking at these four categories here. We'd have organizational costs here, legal, state fees, and so forth. Any cost required to set up this organization here. And then we have travel-related, employee salaries, feasibility studies, accounting, tax, and governmental affairs here for this startup operation. And then we can have training here of local employees, maintenance here, computer systems, finance, and operations. So it covers some pretty broad topics here, but you want to separate these costs out here for your startups. And then we could have recruiting, organizing, training related to establishing a distribution network here for our new products. All right, so you can just see here that you'd have to separate out your startup costs here from your regular costs here when you're starting up a new operation. And then the other item here would be initial operating losses. Some companies would like to capitalize any initial operating losses, but that's not permissible here per GAAP. So operating losses incurred during the early years should not be capitalized. The early years here meaning a startup of an operation or a different company here or a division of a company. And accounting and reporting standards should be no different for a company trying to establish a new business than they are for normal operations here of a business. And then advertising cost, you must expense the costs as incurred or the first time the advertising takes place here. So again, a separate topic here, but again, they're expensed as they're incurred here. And then computer software costs for selling and administrative activities, developing new computer software systems here. Now, this is accounting for computer software is a specialized and complex accounting topic which has to be addressed separately. So we would be addressing those separately. But anyway, going back here, again, these are intangible assets here, just generalized discussion here, and therefore startup of operations, starting up a new division of a company or starting up a new company itself here. And we just separated these out here, and really keep track of them separately here when you're doing a startup operation. So little common sense goes a long ways here, but for the most part, these costs here are expensed as they are incurred here rather than capitalized.